VICI stock, ticker symbol VICI. This stock is up 12% year to date as of recording this video, which is quite a lot compared to the S&P 500, which is down 14% year to date. One of the reasons why people love VICI stock is because of the dividends. But how about the future of this business, and what about the fundamentals? In this video I'm going to show you real quickly what VICI does, the historical returns, the fundamental analysis, dividends, their major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does VICI do? VICI Properties is a real estate investment trust based in the US. It acts as an owner, acquirer and developer of real estate assets across gaming, hospitality, entertainment and leisure destinations, including Caesars Palace, Las Vegas, MGM Grand and the Venetian Resort Las Vegas, three of the most iconic entertainment facilities on the Las Vegas Strip. When we dive in the latest quarterly results, we see that they have 43 properties and 4 golf courses in 15 states. The weighted average remaining lease term including renewal options is 43.9 years, and they have a 100% occupancy rate, which is quite impressive. When we check the geo breakdown, we see that Las Vegas is by far the most important region, representing 55% of the total square feet and 45% in revenue. So the rest of the states represents 45% in square feet and 55% of the total rent income. When we check tenant diversity, we see that Caesars is by far the biggest, together with MGM. Combined, they represent 76% of the total rent. 80% of the total rent is public tenant and 20% is private tenant. When we check the revenue breakdown, we see that income from sales type leases represents around 56% of the total revenue. Income from lease financing receivables and loans represents 40% of the total revenue. Other and golf represent only 4% of the total revenue. All segments are up big time versus last year. A thing that I don't like about the stock is the fact that FFO per common share is down from $0.56 last year to a negative 6 cents this year. The AFFO is at 0.48 right now, which covers the $0.36 dividends by a decent margin. So dividends are covered. They expect to be in a 2022 full year range of 1.89 to 1.92. Which also covers the full year dividends of 1.44, so that's something I really like about this company. The last thing that I want to highlight is the fact that in the recent quarter, VICI completed the strategic acquisitions of MGM, completed inaugural 5 billion investment grade senior notes offering, and most importantly, VICI was added to the S&P 500, which is a huge thing, so I really like this part. And now that we know more about VICI, it's time to check the historical returns to see what happened there. I decided to include the S&P 500 as a benchmark and also include some of the major competitors such as AVB, Welltower and EQR. On the 5-year chart we see that VICI returned a whopping 160% and easily beating the S&P 500 including dividends. The S&P 500 returned a decent 84%. AVB, Welltower and EQR are around the 30% return including dividends and underperformed the S&P 500 by quite a margin. On the 1-year chart we see that VICI returned almost 22% versus the S&P 500 returning a minus 6.5%. AVB, Welltower and EQR are again getting the same return, around minus 5%. On the 6-month chart we see some similar results. VICI returned 28% while the S&P 500 is at minus 1.5%. AVB is at minus 10%, Welltower is at minus 2.5% and EQR is at minus 8.6%. So VICI did beat the S&P 500 again, and all other stocks underperformed again. On the 1-month chart we see that VICI returned almost 2% versus the S&P 500 returning 4%, same as AVB. Welltower is at minus 6% and EQR is at 2% return. So overall, VICI did outperform the S&P 500 by quite a margin, while the other stocks underperformed the S&P 500 in most cases. Does this mean that VICI stock is a buy right now? Let's find out by checking the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. I also want to mention that I'm almost at 1000 subscribers, so please help me achieving this huge milestone by giving me a subscribe. In return, you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. VICI is a 23 billion market cap company with a PE ratio of 23, which could indicate that this company is around its fair value. But since VICI is a REIT, there are some other numbers to see its valuation. 12 trailing month revenue is at 1.55 billion, and in this graph we see that revenue went up quite nice and steady. Unfortunately, we have only 3 to 4 years of data, and please note the big increase in revenue in the most recent quarter. Net income is at 984 million, which gives us a profit margin of 63%, which is really high and also very typical for these kind of companies. The 5-year average profit margin is exactly the same, so margins are very steady, which is something I like. Return on assets is at only 3.3%, which seems to be very low, but this is very typical for these kind of companies, so I'm not that worried. Return on equity is at 8% and basically the same story as with the return on assets. The most important number here, return on invested capital, is at 5.7%, which is too low in my opinion. I prefer companies with at least 10%, but the good part is that it's significantly higher than the 5-year average, so it's increasing right now, which is a good thing. A thing that I don't like is the cash to debt ratio. It's very common for REITs to have a lot of debt compared to the cash position, since they use debt to grow the business. But in my opinion, with only 614 million in cash and debt at 14.5 billion, things are not looking that great. I prefer companies which can pay down at least 50% of the debt. And with REITs, this number could be lower. But in my opinion, the current debt is too high right now compared to the cash position. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to pay dividends, do acquisitions, buy back shares, research and development and all other things. And in this graph we see that free cash flow went up quite nice and steady, so this is something I really like and didn't expect, to be honest. The last thing that I want to discuss are the FFO and AFFO growth numbers. In this graph we see that VICI has a 3-year compound annual growth rate of 25.8%. for the AFFO, which is pretty good compared to some competitors. The AFFO margin also looks really good in the latest 12 months, around 92%. And the last number, the price to AFFO, is at only 19.4, which could indicate that VICI is undervalued, since this is one of the most used numbers to calculate a REIT's valuation. Based on the FFO and EPS, things are looking quite differently, and based on sales, it's also below the 20 mark. Later in this video I will give you my 3 price targets to see at which price VICI stock is a buy. Next up are the dividends, one of the reasons why people love VICI so much. Dividend yield is at 4.27% and of course very high. But this is also very common for REITs in general, so I really like this number a lot. Annual payout is at $1.44 a share, and we saw that the 2022 guidance AFFO will be around $1.9. So they can pay the dividends quite easily. The payout ratio isn't displayed correctly since REITs use a different payout ratio. It should be around 75%. There is no 5-year growth rate since they only pay dividends for a couple of years. VICI grew the dividends for 3 years in a row. Back in 2018 they started paying dividends at 26 cents per quarter. Right now they pay you 36 cents per quarter. The next part of this video will be about the fundamentals of VICI versus their major competitors. I decided to include AVB, Welltower and EQR. All companies have similar market cap, which is quite interesting. VICI is trading for the lowest PE multiple here, so to me they are the winner. VICI also has the highest revenue growth year over year and the highest 3 and 5-year compound annual growth rate. Net income is growing the highest at EQR, and it's the same story with the free cash flow. VICI has the highest gross margin, but EQR has the highest net income margin. It's the same story with the free cash flow margin. EQR has the highest return on equity, but VICI has the highest return on total capital, since the number for Welltower is a bit diluting and not fully correct. We see that all companies have a lot of debt compared to the current cash position, so no winner here. The last part are the dividends. VICI has the highest dividend yield and also the highest dividend growth compound annual growth rate. They also have the longest consecutive years of dividend growth streak, so to me, VICI is the winner. Overall, I think VICI did very good and it seems to be a better stock in many things versus the major competitors. Last part of this video will be about the 3 price targets that I created using the Everything Money software. It's one of the best tools out there, so definitely check them out. Since VICI is a REIT, the number might be not as accurate as always. But let's start with the revenue growth. We need to fill in a low, mid and high assumption. I expect things to slow down a bit. We are recovering from the lockdown period, so revenue will take a big jump for companies like this. So I'm a bit conservative on the revenue growth, and I fill in 8, 10 and 12%. For the profit margin, I'm going for 55, 60 and 65%. Same story with the free cash flow margin. For this company, I want to pay a lower multiple since FFO isn't looking really great. And it will be harder to grow the business at high numbers. So I'm filling in 17, 18 and 19. Same story with the price of free cash flow. My desired annual return is 15%, which is higher than my usual 12.5% since I want a higher margin of safety. You can easily get a 10% return with owning an ETF, so that's why I'm choosing these numbers. Right now, VICI is at $33.7 a share as of recording this video. I hit analyze and we see some green numbers. We have a low price target of $20, a mid price target of $26 and high price targets of $34. So if you believe these high numbers, VICI stock is a buy right now, but there's not a lot of potential to be honest. When I change my 50% return to the usual 12.5% return, you see we have some different numbers, and the high price target is at $40 a share instead of $34. But since this is a REIT, it's very difficult to come up with the correct price target using this tool. Right now I think VICI could be undervalued and probably has a potential of $33 to $40 a share. My final conclusion on this stock is that they are focusing on a unique industry. Dividends are looking good and you easily outperformed the S&P 500 in the past 5 years with owning VICI. For now, I think VICI could be undervalued, but I still don't like it at this price. So I'm waiting for the stock price to come down a bit more and add it to my watchlist. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.